Hello guys, welcome to another backtesting video. Today I'll be backtesting the data on Monday, as you can see, which is 3rd of February 2025. As you can see, the higher time frame bias on the weekly time frame is clearly bearish, and also on the daily time frame the price is bullish. The market structure on the daily time frame is also bearish from this lower high lower low. The price is ranging within this bearish solidified range. As you can see, the price is also rejecting to the daily supply zone here, and we can anticipate the price to go down from here to fill up this fair value gap. Whereas on DXY, my bias is clearly bullish, targeting this, rejecting from this daily demand zone right here, and then targeting this liquidity, this sort of liquidity right here on on Monday. And also the weekly and the daily bias were aligning on Monday. So whenever the weekly and the daily bias are aligning on Monday, I tend to trade. Here also we can see the price, whenever there is a gap in the markets like it was here, the price always tend to come back and fill up the gap. As you can see right here, whenever there is gap in the markets, I've seen it so many times, I've seen it happen so many times. Whenever there is gaps in the markets, the price comes back and fills up the gap. Okay, so on Monday my bias was clearly bearish, and also the weekly and the daily were aligning, so I was looking for sales on London session. As you can see, New York session, there is news on 8:30 p.m. Indian Standard Time, so that is when I go to the H4 time frame. On the H4 we can clearly see the price is making higher high, higher low, higher high, higher low, higher high, lower low, lower high, lower low, change of character. This supply zone here was invalidated due to the candles already mitigated those supply zone, whereas now this supply zone is valid because of this change of characters and change of character, sorry, and there is a fair value gap right here. And yeah, if my bias is bearish on Monday, my target would be the previous week low, but also the previous week low is very close right here, so also it was not one of the best, targets, to be honest. And when I entered, when the market opened, it literally opened a huge gap. There was a huge gap down in the market. As you can see, 72 pips a gap down. I have seen this is one of the biggest gaps, new week opening gap I have seen in the markets. And whenever the market is opening a gap down or gap up like this, whatever the bias may be, I don't care, right? The price always is attracted towards the gap, and even if it was a small gap, the price would be attracted towards it. But in this case, this is a very huge gap right here, and even on DXY, a huge gap formed on the market, as you can see right around here. And yeah, a huge gap right here, as you can see, boom, right? So it made so much of sense on DXY and GBP USD, and also on Euro USD there was gap, so I anticipated the gap to get filled. My bias was bearish, right? Even if your bias is bearish, but there is a huge bearish gap down or a gap down on the market, the price always needs to go and fill up the fill up the gap first, and then balance the price, rebalance the price, and then, like, there are pending orders here or needs to get some liquidity to then continue to the downside, because liquidity is the essence of the market, and without liquidity nothing can happen in the market. So I anticipate, I probably was looking for a sell, and before this trade I didn't know this, but now I know this, right? There was a huge gap down. Even though I traded with the bias, my bias was bearish, there was a huge supply zone right here on the M15, and I have also seen trades like this work in the past, so I have taken this trade at our time window. Beautiful accumulation, manipulation, distribution, entry. If I show you, there was beautiful accumulation right here. After the accumulation, the price literally went down, gave us the fake move, induced all of the early sellers right here. There was accumulation. Inducement is also called manipulation, and after the manipulation, M15 point of interest got mitigated, and then we got a change of character. The only thing that was not clear in this market, that was not clear here, was the change of character. The change of character didn't happen perfectly. That was the only red flag. Otherwise, this trade was valid. But I also have to keep one thing in mind, that there is a gap, right? So whenever there is a gap in the market, the price makes so much of sense to go and fill up the gap. I have seen it a gazillion, literally I have seen it a gazillion of times now in the markets. Even me, I am now 1 year in the markets, right? My experience level in the market is very high right now. And yeah, the gap in the market did got filled, as you can see, as expected. Always whenever there is a gap in the markets like this, the price the price 9 out of 10 times goes and fills up the gap first, even though it wants to go down first. For me, it makes sense to go and fill up the gap, and then it might go to the downside, right? So that is exactly what I wanted to tell. And yeah, this was the trade on Monday. Beautiful things got to learn. Whenever there's a gap, draw the Fibonacci retracement from the gap to the first candle. As you can see, the gap and the first candle, this is the 330 candle, market open candle. So from the gap to the first candle, and then wait for the retracement to the equilibrium, and then see if it's rejecting or if it wants to go through. In this case, it went through. So now, according to how this Monday candle closed, I adapt to the market conditions, right? I don't predict the moves before they happen. Nobody can do that, and maybe some can, but I don't care. I adapt to the market condition, and if we are bullish, then we will look for buys. That's it. So this was the trade, and I have also back tested this and also journal this trade. As you can see, if the change of character is not happening impulsively, don't consider it. And also we need some sort of change, manipulation in the markets before entering the trade, because obviously if there is manipulation, that means there is liquidity, and liquidity drives the market. Whenever there is new week opening gap on, or any gaps on Monday, and it's sell side gap, and your bias is bearish, don't trade away from the gap. It's not worth it, right? Always trade with the gap. Whenever there is a gap open in the markets, always try to trade with the gap, not against the gap.